Hello, everyone. I'm very excited today to have one of the top leaders in the crypto space, Michael Vogel, founder of Netcoin, one of the largest exchanges in Canada, and also the founder of CoinStream, the US, which is a virtual version of a Bitcoin ATM. Also, with his passion in entrepreneurship, Michael is the founder of Encore Ventures. So, Michael, thank you very much for your time, and it's really great to have you back on my channel.
Awesome to be back. Thanks for having me.
So I'm pretty sure that many investors were excited to see Bitcoin go up from 35,000-ish all the way up to 73,000. But I'm also sure that most investors are wondering what will happen next as we are getting very close to the Bitcoin halving event. Can you share what you see may happen after the Bitcoin halving happens based on your experience going through these past Bitcoin halving patterns that you have seen?
Yeah, what happens with the Bitcoin halving, it's pretty cool. It's almost like a leap year for Bitcoin. Every 4 years, the Bitcoin algorithm auto updates. And basically, the reward that miners get for mining Bitcoin is cut in half. So that rate of supply decreases every 4 years. And typically, what happens is that results in two things. Most obvious is obviously a supply change, right? So that the rate of new Bitcoins being introduced into the ecosystem is dropped in half. And so what we often will see is this sort of lag effect where due to this reduced supply, either the same amount of demand or what we've seen before is an increased demand will send the price of Bitcoin to all-time highs. And that's what's happened in every previous cycle. So this time around, Bitcoin investors know about this. And so the question is all this priced in? Do we know that the halving's happening? And we know that the price is going to go up. And so is that already priced in? One thing that we noticed this time around is actually Bitcoin has hit an all-time high already. And normally all-time high in previous bull market cycles would happen months after the actual halving event. And so some will say it's priced in. Others will say that it actually might be more dramatic this time around. And the reason being is the people mining Bitcoin are different this time around than in different cycles, right? So if we go back to the beginning, who mined Bitcoin? Well, it was someone with a computer in a basement or someone with a phone or you didn't need a lot to get started. These days, Bitcoin miners tend to be large, sometimes publicly traded companies that are well capitalized, and this is not their first rodeo, right? They know that Bitcoin has the potential to dramatically increase in terms of upside value, and they have different economics than the Bitcoin miners of yesteryear, right? So if we kind of go on a journey back in time, let's say you were mining Bitcoin at home or in an office, or you had a small startup where you were mining Bitcoin, what typically would happen is you would sell off some of your Bitcoin every month to just cover your operational costs. I got to buy computer hardware. I got to pay electricity. That's a big one, just to keep the operation going. And so you'd see that affect the market, right? So new Bitcoins are mined, the miners have these Bitcoins, and then they're pushing them out on the market, right? They're adding this liquidity, they're selling it off. That creates a bit of selling pressure, which can obviously make the price go down if all these miners are selling. But kind of long story short, now that there's a lot of these more, let's call them corporate miners, they may not be as reliant on selling off their Bitcoin inventory to finance their operation. They may already be well capitalized where they're just saying, you know what? We're mining Bitcoin because we want to hold Bitcoin. We believe in the long-term value. And so we're not going to be selling off every month to pay for our operation because we're already capitalized. And so what does that mean? Well, it means less selling pressure, definitely means less inventory because we know due to the halving that there will be 50% fewer Bitcoins mined every block. And so with those things two coupled together, and then actually the third thing, an increased demand, we have the demand through the Bitcoin ETF, basically two factors that are limiting supply, one very big factor that is increasing demand. That could be a very interesting scenario in terms of supply shock and demand shock. So maybe we're not priced in. Maybe we're just getting started. And so that's something for investors to think about.
That's really interesting because one thing that I was keeping an eye on is, as you said, for the Bitcoin miners. So if you have the Bitcoin halving event, the rewarding of a Bitcoin goes in half, right? And so I guess if you think about the electricity and the money that goes in, it sounds like the Bitcoin miners might be paying more money or spending more for the electricity in order to get the reward. So I guess my question was, you're saying that now the institutions or the big companies are coming in with a large volume or scale, so they don't have to worry about the cost and they just keep accumulating Bitcoin because they know that the price will go up eventually, right? So usually after a halving event, I think the Bitcoin miners or the Bitcoin mining companies, the stock goes down because, it goes in half, the electricity costs higher and, it's not efficient for them. You're saying that this time it might be a bit different for the Bitcoin mining companies because they're scaling in big volume now and it's not an individual, person in their home or office mining the Bitcoins.
Definitely. I think the business case of the past was let's mine all this Bitcoin and a fraction of it, let's sell off every month just to finance our operations. And if we wanted to, we could sell all our Bitcoins tomorrow because that's our business model. There's been enough cycles. Bitcoin is mainstream enough from an investment standpoint that people are aware that Bitcoin has the potential for this massive upside. And so these well-capitalized miners have changed their model, where it's like we want to participate in the Bitcoin ecosystem as well as bet on that long-term appreciation factor. And so there's almost a disincentive to sell your Bitcoin. And without them, the Bitcoin network doesn't exist. So that's important.
Another stock that I wanted to talk about is, of course, Coinbase. And I think it has a different model on how they benefit from the Bitcoin, halving and the demand. But in the case of Coinbase, it's an exchange where after the SEC approving, the Bitcoin ETFs, the big money or institutions will come in and, buy Bitcoin from, I think, Coinbase. And I think they said that 10 out of the 13 ETFs are planning to use Coinbase as their custodians. So I was also wondering what you thought about Coinbase as a stock correlation with the Bitcoin halving in its rally.
I think as far as Bitcoin companies go, Coinbase has a great reputation. Certainly been around for a very, very long time. They're publicly traded. And I think that gives people a lot of comfort when they're choosing to do business with crypto company. So that's a good thing. As you pointed out, Coinbase operating as the custodian for these high profile Bitcoin ETFs is definitely a new model and a very important service because just the BlackRock ETF alone set records for a new ETF in terms of capital inflow. Right? It was the fastest ETF ever to reach $1 billion under assets under management. I think now it's over 10 billion, maybe even 11 billion. And these things only launched in January. So there's been a huge amount of capital inflow. I think in March 2024 alone, I think over $100 billion of trading activity occurred within these ETFs. So it's big volume, it's big business, and Coinbase is positioning itself well to be right in the middle of that storm because I think this ETF model is here to stay, and it's just allowing the possibility for capital that wanted to be in Bitcoin that couldn't enter before can now enter, right? Pension funds, any type of hedge fund that couldn't touch the Bitcoins themselves, they can now buy through an ETF. Coinbase is the custodian. And then that's this new model of how they can participate in Bitcoin.
I think in the last Bitcoin halving cycle, people were saying it was different because the institutions like MicroStrategy or even Tesla, the institutions were coming in and buying Bitcoin as, their asset in their balance sheet. And the big money is kind of getting in, but we didn't have an ETF at that point on the previous cycle. But this cycle, we have the, Bitcoin ETF being approved by the SEC. And as you said, a huge amount of money is coming in. Do you think this time, this halving event cycle will be different because we have now the, Bitcoin ETFs, and as you said, we have the general population now having an option to hop onto the investment for cryptocurrencies or Bitcoin. So do you think this time we will have a cycle where we will not see a major crash? Or do you still, anticipate a 80 to 90% crash after, the peak for this cycle?
That's such an interesting question because you're right. As time has gone on, there's more investors in Bitcoin now, there's more liquidity. And the result of that is actually less volatility overall. Still volatility, but less. I remember many months where Bitcoin would drop or increase 50% within 30 days. Right? We haven't seen that type of volatility in years now with Bitcoin. So that is a very noticeable change. And that also, I think, attracts different investors. You mentioned MicroStrategy, a publicly traded company with Bitcoin on their balance sheet, massive amounts of Bitcoin. But I think that lack of volatility or less volatility may pave the way for other companies to just include some of their cash balance to earmark some of that for Bitcoin. I think that's definitely makes a logical sense. I'm sure every board is having that discussion of what do we do with our leftover cash, especially in these times, right? With high inflation, the question of Bitcoin as an inflation hedge is definitely full center in a way that has been talked about in the past, but hasn't really been experienced in the Western world.
Another thing is, I think a lot of investors that start to get into cryptocurrencies and, heard about Bitcoin, saw the rally, are thinking that because we went from, let's say, 35,000 to 73,000 in within 6 months, a lot of people are thinking that this was the rally and now we're going to get a pullback and we didn't even have the halving event yet. So from an expert like you, I'd like to hear what you think will happen, whereas we had a rally for sure, but do you think we're going to have a pullback and then go for the real rally in the next 12, 15 months? Or do you think this was a rally and we're heading down?
So definitely this has been a rally that I think has exceeded the expectations of most people that follow Bitcoin. The April halving is unprecedented because this is the first time that Bitcoin has surged to a new all-time high before that pre-programmed halving event. Right? Normally there's a lag period where this all-time high, if it does happen, happens after the halving, and sometimes weeks or months or the year after. So for that to happen before is unprecedented. That's the only way to describe it. And so, yeah, the question investors have on their mind is this it for this cycle, or is there more to come? I think a few of the points that we talked about in terms of how mining fits into this may mean that we're just getting started. And the fact that these ETFs are so new, and I think a lot of people are still waiting. Things happen fast in Bitcoin, but I mean, January, we have the ETF. April, the halving. There's definitely, I think, a wait and see approach that portion of investors have been taking all along, even those that aren't invested in Bitcoin right now. I know from previous cycles through Bitcoin's, let's call it crash or bear market, it was the lowest capital outflow that we'd ever seen in terms of Bitcoin bear markets, right? Typically what happens is Bitcoin hits an all-time high, very volatile. It then goes to a massive low and stays low for quite some time. And typically what we'd seen in the past is massive capital outflows, people selling off their Bitcoins and leaving the crypto ecosystem, at least for the time being. And we didn't see that as much in the previous bear market. Bitcoin more or less stayed put. You know, a lot of coins just sat still in wallets and didn't move. So I think this time around, obviously those battle-tested investors in this market are probably less likely to sell now. So I don't see selling pressure coming from them, but could see selling pressure from people that are, let's say, newer to Bitcoin, that are maybe participating through the ETFs, because there is a lot of liquidity now. It is easy to buy and sell. There is also a lot more capital now in Bitcoin. There are a lot of newer players, newer investors that are participating. And so will they hodl as much as battle-tested Bitcoin investor, or will they be quick to exit as market conditions change? We can also look at other more traditional factors that have impacted the price of Bitcoin over time, right? And that goes back to whether the stock market is rallying or not, right? Typically what we see is when the stock market is not doing well, capital tends to not flow into riskier assets, aka Bitcoin. Capital tends to actually flow out of Bitcoin. And so I think as long as the stock market remains bullish, as long as we're not in a recession period, there could be a rally 2.0, or we could just be getting started with the price of Bitcoin. It would definitely be unprecedented, like I said, for things to explode quickly from here. But these are different times. Bitcoin is more mainstream now than ever, and more accessible than ever, more accessible to corporate America more than ever, you know, not just retail investors. So those factors are things that people should be considering and seeing where it goes.
So it's very interesting. So you're saying that the volatility of Bitcoin is stabilizing, or at least it's not going volatile like 50% per day. And I think that's a good sign because it's getting more recognition and it's being, more and more less thought as a spec play, I guess. But I've heard about the 5.3 rule for the Bitcoin price, but if you do the calculation on the 5.3 rule, it seems like the high for this cycle would be around $80,000 to $85,000 per Bitcoin. But personally, how high do you think Bitcoin might go up in this cycle? And also, eventually, how high do you think Bitcoin might go in the future?
There's definitely different philosophies on where the price of Bitcoin is going. I have heard that rule. There's the Plan B philosophy, and there's a few other models that are out there. There's a newer one going around lately called the Bitcoin Power Law. There's an interesting site that monitors it, bitcoinfairprice.com. That one's not as good as picking the tops, but basically what they've shown is if you take the Bitcoin price logarithmically, graph it, you can basically see this band over time where basically Bitcoin never drops below this particular amount as time goes on. So if you look on that graph, it'll show like the previous lows. We'll try and predict the future, and it'll show based on a certain date where it believes, according to that law, where the price of Bitcoin will never go below this threshold again. And so like if I were to pull it up for this time of year, it's showing the bottom price. It says that the price of Bitcoin will never go below 26,893 as of April 2024, according to that graph. Now, again, all of these models are true in retrospect, right? Whether these are accurate in the future, literally no one knows. But if that model were to hold true, then numbers start to get really interesting, right? We start to see kind of like what you're saying, market highs potentially in that sort of 80,000 range, or some say over 100, maybe as high as 130, depending who you ask. Some people believe it'll go even more. or it may happen where there's almost like a super cycle, like two sort of all-time highs that will get hit at different periods over the next couple of years. But I think that that sort of low point is almost more interesting to monitor than the kind of speculative all-time highs, because the sort of the Bitcoin floors are almost more interesting because they sort of represent more what the price of Bitcoin will be if Bitcoin has this more stabilized mass of people using it, right? And so that's sort of where maybe less volatility, more kind of normalizing of the Bitcoin price will emerge. It remains to be seen. This cycle will be probably the most interesting to watch of all, just because of the level of participation that's now possible in it. To your other point, where the price of Bitcoin will go over time, everyone has a guess, and the stars definitely have to align for these sort of mega predictions to come true in the near term. A lot of it has to do with the adoption of Bitcoin, but it also has to do with other factors, right? Inflation and what the dollar is worth at any point in time. 100 years from now, we kind of assume that the cost that someone spends to buy a car or a house is not going to be the same 100 years from now, just like it wasn't 100 years ago, right? Inflation is something that's very real. And with Bitcoin as an asset class that Michael Saylor describes from MicroStrategy, describes Bitcoin as sort of a deep freezer for money. It's a separate system that sort of exists separate from the monetary system as we know it. And so will Bitcoin reach $1 million? Yeah, it could, but that is relative to what the dollar is worth at that point, if that makes sense. I think what most people want to know is, will Bitcoin reach $1 million in the next year? That's much more compelling and interesting than 100 years from now. But Bitcoin is at an all-time high in a very unusual market where inflation is rampant and high interest rates, right? I think a lot of people are surprised that this is happening now. We've sort of outlined these factors as to why it has happened now, right? ETF and halving being two big parts of that. I haven't seen any indicators that we're in a bear market. I think all indicators are showing that Bitcoin is currently in one of its bull cycles. The extent to where it goes, just like the model you pointed out, and I think other models that are out there, I think it's important for investors to understand and look at that and just kind of see what model they agree with. But I think stars were to align and things were to work out well for Bitcoin in this cycle, most people definitely see a demand shock coupled with a supply shock, which will lead to a further all-time high at some point. But the road along the way, as it usually is with Bitcoin, tends to be volatile. Although these days it's a little bit less volatile, but still volatile. So that's something for investors to definitely keep in mind.
Wow, thank you very much, Michael. I think that was great insights, and we covered a lot of topics here. And again, I want to thank you very much for your time. I'm pretty sure that a lot of people got a lot of insights out of this interview, including myself. So thank you very much again, and I would love to have you as a guest on the back half of 2024 after we see what happens to Bitcoin. So thank you.